Good morning,
Good
madam.
morning, ma'am.
Yes. Shall we start?
Yes, ma'am.
Okay, ma'am.
Just searching for the today's topic. Last time also I didn't find that.
Yeah.
No. Good morning, madam.
Yeah. In our previous class, we discussed about stock exchanges, stock exchange
madam.
and the secondary market element. And here, shares, debentures, shares, securities of companies are traded. Okay.
Ma'am, please show the screen now.
क्या रद्दी ना तुझने Yes. Stock exchanges functions. Stock exchanges performs various functions like providing safety and security to the investor savings, and also it provides price determination, helps in price determination. Is the screen visible? Prices of securities can be determined with the help of stock exchanges, and working of stock exchanges are regulated by SEBI, so it provides required safety and security to the dealings of the security markets, and it also helps in mobilization of savings of individuals, business firms, and corporate entities. Okay, stock exchanges secure good public response for the companies to raise their capital. Okay, so now we also discussed about the services of stock exchange towards community, towards investors, and towards companies. So stock exchanges provide various services towards these like community, provide safety and security, and encourages savings habit in the consumers or investors, so that they can savings of the consumers are encouraged so that they can multiply their savings. Okay, and these stock exchanges, by continuously publishing the shares, the prices, share or security prices, helps the investors to know and compare the prices of various securities and take the decisions accordingly. And it's also it is like stock exchanges are like a avenue, means a source where the investors can keep their savings and get good returns upon that. And to the investors, and the liquidity of investments made possible, that is, investments in stock exchange listed companies enables the investors to convert their shares into securities, into cash immediately as and when they are want, and also provides price quotations time to time so that they can make the comparisons, analysis, and do proper investments. Security also, unnecessary speculation can be avoided, and it's also by regular continuous analysis and comparisons, every investor becomes an expert in dealing with the securities. And it stops unnecessary fluctuations of prices and unnecessary speculations of security prices because they are through a regulated body. So it stops unnecessary speculation. To the companies, as companies to which wants to raise their capital from the public which wants to raise their capital from the public have a source through stock exchanges, easily can raise their funds and capital, and can make their funds are mobilized. Okay. And by listing in the stock exchanges, companies can gain investor confidence, and they can able to get more investors at a national and international level. Also, they can fetch a more number of investors because they are they gain confidence by listing in the stock exchanges. That's how companies get benefit by listing in the stock exchanges. And raising of capital through public issue also makes easy for the companies, which are again, because they are again under the regulations of a SEBI, so it makes easy for the company to raise their capital through stock exchanges. So that's about stock exchanges we learned. And today I'm going to, as you all are asking about important questions, let us deal today's topics, the important aspects, and only the last 10-15 minutes I'll let you, from my side, whatever I feel, I'll tell you. Okay. Now membership. Coming to the membership of stock exchange, generally members of stock exchange only can have the access to into the stock market and trading network. Okay. A non-member, generally who are not members of the stock exchange, can do the non-members can do the trading. Okay, they just can do the trading of securities, or trading in the sense buying and selling of securities, but they cannot enter and have a access of trading the networks. Okay. So generally, if a person's own who can be a member of these stock exchanges? An individual who is an Indian citizen who completed 21 years of age and who is not bankrupt or insolvent, Okay. And he is not engaged in any other business or okay. Any of these qualities. A person who is possessing these comes under these categories can be a member. Generally, these members can be called as a broker or jobber. Okay. Let us see about these broker. Who are these broker mean and the jobber mean? You can expect these under short answers also, like a broker, right? A broker who is a jobber, or the members of the different types of members in the stock exchanges. So brokers. Who are the brokers means? The brokers are the registered members of stock exchanges licensed to trade on the behalf of investors, either to buy or sell securities on behalf of the shareholders. There are laid down rules enabling the broker to charge the on trading securities. Yes, you might have come across of Carvey, Gen Securities, okay, and what you call Sher Khan, India Bulls, right? Did you heard of these? These all are the brokers who got license trade on behalf of a investor. See, I'm investor. I have a lot of savings, but I have zero knowledge. I can't trade on myself for the securities in the stock exchange listings based on the day-to-day activities. Okay, I don't have how to trade. I don't know any knowledge. Then on my behalf, this broker who is licensed the stock exchange, who got license from the stock exchange, that broker will trade on my behalf. I'll invest and he do the trading on behalf. Of course, he take the instructions from the investor, but he trades on behalf of the investor on a commission basis. Okay, based on the number of securities traded, he charges the brokerage charges. Understood? So brokers are who? These are the registered members of the stock exchange. They'll get a license and they trade on behalf of the investors. Trading in a sense, it's a buying or selling on behalf of the investors. What they buy or sell? Securities. Buying or selling of securities on behalf of the investors, that is shareholders. Okay, and they charge, they work on the basis of commission, and that commission is based on the number of securities traded. Okay, the next one is jobbers, and you can write the examples. The brokers, registered brokers and stock exchange licensed brokers means example Gen Securities, Carvi. Of course, Carvi is in a indulged in the scam, that is different, but Carvi is one of the stock broking company, private stock broking company. Gen Securities, India Bulls, Share Khan. These are the examples of brokers. Now, next one is jobbers. Jobbers means what? A member of the stock exchange who buys securities on his own behalf. He buy on his own behalf. Generally, jobbers is a dealer in securities and usually specializes in one type of securities. Okay. So on stock exchange, we have a jobber called Taravarniwala. Even this person who is Junjunwala, he is also one of the jobber who buys on his behalf. He buys securities on his own behalf, and he specializes on purchasing the securities of particular type of securities only. Okay. He is not prohibited from buying and selling of shares on behalf of others. He can buy on his on behalf of others also. He buys on his own and he buys on behalf of some other traders. Okay, so a member of the stock exchange who buys and sells securities on his own behalf, we call as a jobber. Means a person, a member of the stock exchange who buys on for his own self, we call as a jobber. Generally, he is like a dealers in the securities and dealers in the securities, and usually specializes in a particular type of securities, like shares only, dealing only with the shares. Okay, or only with the debentures, or only with the what you call equity shares or bonds, like that. So he also not he can trade not only for his own sake, he can trade also for the others. Okay, so you have the difference, differentiate between the broker and jobber. Please, when I'm taking the class itself only, I'm usually used to tell you these are the important questions which you can expect in examination as short answer, long answer. If you are regularly attending the classes, those points you please note down and mark it in your books. So actually, no, not necessary separately for asking. Okay. So this broker versus jobber. Broker versus jobber is another important question in short answers. Okay. So broker is one who acts on behalf of the investor. He do trading on behalf of investor. Jobber buys on his own self, and he involves in trading, buying and selling. So he involves in buying and selling, but so only particular category of securities. No, he's like a middleman between the company and there is a buyer and the seller, two investors. He is a middleman. If he buys the securities for someone else, if he's for himself, no middleman. He himself buys directly. He broker, as he acts as a middleman, so he gets a brokerage for the services. He himself purchasing, so he will not get any brokerages. Okay, and the next one is types of speculators. Yes, these are again important terms which you can get in your examination. Write about the different types of speculators in stock market. Long answer question, you can expect a short answer question as well. Okay, so particular securities, some speculators may generally in stock exchange is the trading of securities, right? And daily that these securities values keep changes depending on their demand and supply. So there are certain people who involve in these stock exchange activities for speculative purposes. Based on the way they speculate with the securities, we have different types of speculators. First one is like bulls, bears, stacks, and lame ducks. So let us know about this. The bull means who? A bull is a speculator who expects a rise in price of shares in the future. Okay, like bull. The nature of the bull is what it always in a raising mode, right? So this bulls or the speculator expects a rise in the price of the shares in future and he buys the shares from the market, securities from the market in order to make a future profits. And not only that, in order to move future profit means when prices rises, he will sell in the market. Okay, so he shows the optimistic behavior. So bull is a speculator who expects rise in price in securities in future with optimistic behavior, and if when prices increases in the future, he sells the securities at a higher purchase. So Indian market. We have a bull called Tejiwala. This even just known as a Junjunwala. This Junjunwala is example for a bull. He's a big bull in the stock market. Who always with his expectations, being an expert in being a jobber with a specialized securities market, he is a big bull in the stock market, Junjunwala. Okay, so we call these bulls in India as a Tejiwala. Okay, we also call them as a Tejiwala. The next one is bear. Bear is opposite to the bulls. These are the speculators who expect fall in the prices of the securities in future. Okay, so they sell the shares in the market so that um, they can sell the shares to acquire them in the future. Like present, if prices are going on, they think no, this company anyway in future because of these conditions is going to this company shares are going securities are going to fall down. So that's expectation he will sell with an expected that in future when prices comes down he can buy at a lower prices. So bear is opposite to bull. Bull expects rise in the price, so he buys and he sells in the future when prices goes high. Bear is the person who expects fall in the prices of the shares in future. So he sells the shares so that he can buy the shares in future at a lower prices. Okay, so we call them as a mandiwala. Where we call them in Indian terms as mandiwala. So there are difference between the bulls and bears. It's a simple that they spread the bullish trend and bears spread the bearish trend. Okay, because of bulls, the prices of shares increases in future because these bears expect that the fall in the price of the price of the securities in future. So bulls always advise the investors to buy the shares in present so that you can make a profits in future. Bears always advise the investor to sell their futures in present now so that in future they can buy at a lower prices. Okay. So we call bulls as a tejiwala, bears as a mandiwala. Next one is lame duck. So stacks. Stacks means what? These are the people who buy the shares in a new issue. Means they buy the shares on new issue, and once shares are allotted to them, those shares they sell at a premium price or at a profit in the market. So the very purpose of stacks are that buying the shares with an object of reselling in the another market for a profit. So they speculate. They just make a speculation over the issue of shares in the different markets. Okay, so stag is a like when company issue new shares or new security. Okay, the new shares he will apply for the new shares with his savings money. Okay, at a lower price. When companies are issuing for the first time, generally the demand will be less. The price will be less because there's a new company, new shares. I don't know, new purpose. Don't know whether it's going to get a good response or not. The share value increases or not. So at that time, the price of a share is lower. So what the stocks, these investors do, these speculators, he apply for the new shares of company, and once he get allotted those shares at a premium or whatever the listing, he sells some good number of his shares to some other investor in the future date for a profit. After a certain period, what happens? Depending on the company response to the company shares and from the investors, the company share values increases. If you see Byju's or this what is recently Zepto, these shares, the company when came for the issue of new shares, because no one has purchased. But even Burger King, when they issued very low price, they issued means a normal base price they issued, and after allotment, after few days, the no, demand for their shares has been increased, and the same way the value of their shares also increased. So that's how what whoever has applied for these shares of these companies and got allotted these shares will sell in the market at a lower prices. That's how they make profits. Lame duck. Lame duck means not successful. Means he tries to make profits. He speculates in different markets with the different securities, but always faces his expectations goes wrong and gets a fail. Those persons we call as a lame duck. Okay. Now, so these are the four types of speculators in stock exchanges. Listing of stock securities. Listing of securities, I'll just give a simple thing. Listing of securities means companies which wants to raise their capital from the public by issue of securities to the public, who has to get those they are supposed to get their company names listed in the stock exchanges, because listing in stock exchanges gives more scope to the uh, in companies to raise their capital quickly and the required expected amount of capital. So for the listing the company in stock exchanges, the companies need to follow certain rules and regulations, terms and conditions, which as per the SEBI and stock exchanges. What is SEBI? SEBI, which is again controller over the stock exchanges. So the activities of stock exchanges are regulated by this SEBI. So these whatever yes, what English. So the applies regulated by the provisions. So it is like a watchdog. Okay, SEBI is like a watchdog over the stock markets, and so the stock markets work under the control. So whatever companies get invested in the whatever companies list wants to list in stock exchanges need to follow the terms and regulations. Okay, so that listing of securities means admission of securities in the official list of stock exchange for the purpose of trading. So once a company get its name registered with the stock exchange, then we call that company is listed in the stock exchange market. That means through stock exchange, that company can trade its securities. Okay. The main purpose of listing of securities, why do companies wants to, I just said, why do company wants to list their securities in the stock exchanges? So that they can raise their capital easily, and because they get confidence from the investors. Okay, investors believe them. Yes, this investing in this particular company listed in stock exchanges gives safety to our investments, and our investments are secured. With that confidence, public come forward to invest in those companies. So the purpose of listing of securities is to safeguard the investors, companies, and general public who are investing in the company securities. It is not only that, it also improves the marketability and negotiability and liquidity of the securities. Means easily securities can be marketed, and the securities prices can be negotiable. It can be converted into cash. Like all these facilities are provided by the companies. Okay. Then right. Now advantages need for listing. This question again, you can advantages of listing. You may expect in the exam is an important question. By listing in stock markets, companies, what are the advantages to the investors, advantages to the company and general public? See, stock markets, whatever stock market advantages or benefits of stock markets to community, investors, share, companies, you learn almost here and there with a little change, you will get the same points here. Okay. So let us see again in a quick way. Listing of securities make investors to believe issue of securities is legal, company legally incorporated, means a confidence. It gives a confidence. If a company listed in the stock market, a consumer investor gets a confidence that it is legally approved and got a registered. And not only that, the investor can feel as the investments are secured, okay, against any secured and safe. The second thing, they need not to pay any unreasonable commissions or for the low standard business, because company, the stock exchange fix the commission prices of the brokers. So whatever the reasonable commission to be payable, that amount of commission only they can pay. So they need not to pay undue more commissions to the brokers. The next one is securities are subject to narrow fluctuations as compared to the unlisted. Yes, in listed company securities, fluctuations are very less as compared to the I'll show other securities. Impart liquidity. Yes, investors can easily liquidate their shares, like can convert their securities into cash through if they are purchase the, if they're possessing the listed company securities, because it provides safety and security. The next one is it helps in evaluating holding of investors proper value of the securities. Okay, and since listed securities are rated high in market position, they are preferred as a collateral securities. Yes, they can offer these listed company securities as collateral securities, right? Now, advantages to companies. Yes, advantages to companies can raise their capital easily. They can meet their capital requirements easily by gaining the public confidence, because the public free dealings and public ownership of shareholders is very important. And companies which are listed in the stock exchanges will have a higher status than the unlisted companies, and priority or from get priority also from the investors. Okay. they'll get several tax advantages also. They get several tax advantages by listing in stock exchanges. These are some of the advantages which investors can get over by listing. Next advantage, sorry, company. Advantages to general public. Yes, what general public get advantages? What kind of advantages the general public get? Company transaction. See, I'm not an investor, but I want to know how a company is doing and how it is getting its funds activated. Right. So in that, so time to time, these companies which are listed in stock exchanges are supposed to what you call publish their annual reports. Okay, annual reports and their performance. All information relating to the company must be provided to the public. So what happens? Public gets immediate response. Means come to know what is happening in the companies, what are the corporate affairs, how they are dealing with, okay, how they are dealing with. All this can be identified easily. So, and based on that, this public can take their investment decisions. Okay, and not only next, insist upon giving due notice in advance of closure of transfer books or and record redemption and payment dates. Okay, they insist upon giving due notice in advance of closure of transfer books and or record. Yeah, if any closing the books or any redemption or any payment dates are over or transferring, that all are to be insisted, given a notice. Okay, it provides reasonable facilities for transfer of registration of rights. Yeah, investors can easily transfer or register their rights at a fair and equitable matter. Next, stock exchange indices. We Bombay Stock Exchange, non necessarily generally National Stock Exchange. In the beginning of this stock exchanges, only I explained you about Bombay Stock Exchange. It is oldest bank stock broker stock exchange in the world itself. We call Bombay Stock Exchange is 30 companies listed. Okay. Mm, BSC 30 we used to say. A national stock exchange is the national level located in the by okay where it is. Yeah, we call is a 50. In stock exchange we call 50 Nifty 50 we used to say. It is a primary index through which world will read and analyze the performance and development of Indian economy. Okay. The next, coming to the important terms used in stock exchange: ex-dividend, cum dividend, spot delivery, square off. Square off generally most of the times they'll ask. Some speculators in the market and trade on the same share by buying in the morning and selling in the evening before the close of the market or vice versa. These traders are known as speculators and they do not take the delivery of make one. The only square off by the end of the day. Mr. Speculator buys the shares of company and in the morning sells once in the and after deducting the brokerage charges. Square off. Means they simply involve in buying and selling of the shares on the morning when stock market opens the immediately some securities in the market they buy and by evening at some certain price and at the end of the day before the market closes they sell again those securities at some profit. So whatever the profit they made, whatever the difference between the price they made in the buying and selling, that's going to be their uh, their profit, which is which they made after deducting the brokerage charges. Square off. Same day trading. Same day, but they buy and the same day they sell. By buying and selling on the same day, they make some profit after deducting the brokerage charges. We call that as square off. Next, you can expect arbitrage. Arbitrage is another important topic. In short answers, you can expect it's like a profit out of differences in prices of a security in two different markets. Say, for example, in security market, certain securities can be traded in security market as well as a domestic market. So those we call as the arbitrage. Hmm? Like they buy in securities in one market and sell them in the other market, and they make profits out of that trading. So that is called arbitrage. It's highly skilled speculative activity. The prices of security differ substantially in two stock markets. Purchases securities in the market where so yeah, arbitrage, I said already again, it is like in two different markets, the same securities which are trading in different markets, he buy in one market where it is selling at a lower price and sells in the other market where it is selling at a higher price. That's how he makes a profit. But it needs high speculative skills. Like he should be good enough in speculation. Okay. The same thing again repeated. If the price of security differs substantially in two markets, that means if the price of any security is having two different prices in any markets, then the market where the price is lower, he'll buy and sells in the market where price is higher and makes a profit. That's how he tries to make a huge profit. He do this exclusively for making a profit. That is arbitration. The next one is Bolt. Yes. BSc online trading system. Bolt is. Okay. Basic online trading system recently introduced is online. Earlier we used to have offline stock exchange system. I told you all to watch if you have Scam 1991, right? In online trading, for the purpose of online trading, this generally BSc classified these companies into five categories: A category, B1 category, B2 category, F, Z, and Z category companies. A and B2 are the high quality equity segments categories. F represents the fixed income, means F category securities which provides fixed income. Generally, investors who don't want to take any risk want fixed returns by the F category securities. And Z category represents the government securities. Investors who want guaranteed returns and fixed returns go for government securities. Z category represents companies which fail to comply with the listing norms and fail to redress investors. So generally, very few people will be there. So like that, the company BSc classified the total securities listed in it into five categories. That you can insider trading means trading company like members company shares by person who is associated with the company itself. Okay, the company member itself only buy the company shares and do the trading. So what happens generally, other investors think such, this company member himself is buying, so that means maybe company is going to make good profit, so let us we also buy. Like that, indirectly they induced outside investors to invest in their company, and so that when demand increases, prices also increases. This kind of trading we call as a insider trading. As a result of this association, secret price sensitive information about the company, such as expansion plans, financial results, takeover, So time. Okay. So these are some of the important topics, and now let us see the quick review of our next topic. That is domestic market. Sorry, not domestic. What is it? Commodity market. Okay. What is commodity market? Actually, markets are classified into two types. That is securities market and commodities market. Okay. Securities markets, whatever we learned now, that is capital market. Okay. Securities markets, whatever we learned is a comes under the security market, like a stock exchange, like capital market, money market, again money market, primary capital market as a primary and secondary market, and stock exchanges. These all comes under the security market, where securities are traded. Okay, whereas domestic market, commodity market is the one where commodities. One second, I just want to. Yes. Okay. So commodities are like commodities like what do you call gold, coal, paddy, sugarcane. Okay, and the metals. All these comes under the commodities. So where commodities are traded, those we call as a commodity market. Means here, this trading of commodities is in order to avoid the fluctuations in the prices of the commodities, and to traders will enter into these commodity markets. So let us understand about this commodity market. So why on this event? The primary aim of this commodity market is so here you will understand what is commodity market and what are this change in the market on physically, right? Commodity markets generally, unlike secondary markets, a spot exchange takes place. These are different from the stock exchanges. Generally, commodity markets, in stock market, how we trade the securities, same in the commodity markets. We call as a derivatives. Derivatives means what? The value of the document is underlying depends on the derivative contract. It is a contract. Derivative is a contract between the two parties, where the value of underlying asset depends on the value of the document depends on the value of the underlying asset. I'll tell you it clearly. Commodity. So commodity market is that economic good, tangible, tradable goods or product or article of commerce. One second, sorry. Sorry. Uh, okay, so like metals, it can be anything which are traded in the market by the marketers and the farmers. Understand means anything that is produced and sold for many different producers is uniform in quality between producers and the produce sell it up. Is a trade at price resulting from its demand and supply. Commodity is a thing possessing value and uniform in quality, generally mined or cultivated or produced in large amount of quantity by variety of producers. Okay, so you have a different types of commodities. Look at here. See agricultural commodities, industrial metals, precious metals, energy. Okay, these are agricultural commodities are like a you have these all are commodities where the marketers produce go is a sorry farmers produce these and their need is there in the entire world. Oh, the demand for these products for different purposes is there in the entire world. Similarly, industrial metals like by mining, these metals are extracted and used in the industries for various purposes, right? And precious metals. These again, these are the certain metals which are precious, extracted, and have a more value. Okay, energy is again oil and gases. These are oil and these oil and gases have a again have a lot of use and used by many uh, in the world for various purposes. So these commodities, but they're produced only for by few group. They used. So these commodities are also traded in the market and speculated in the market. So let us see commodity market. So how these commodity markets are evolved as given here. End of this we go on Indian commodity market. Yes, this you will get short notes. You can expect this if at all you are getting generally very few questions you will get in this chapter commodity market. Okay, 1 second. Let me request on the university. Very few topics means very rarely you'll get the questions from this chapter. And if at all you're getting means Indian commodity market because it is easy level question over market. The difficult task to understand features of spot market you prepare enough. Okay, features of spot market. What else is there? No need actually because this you can expect from this fifth block, you can expect questions on stock exchange instead of this commodity market because these terms and understanding this is very difficult for you at this level. Short answer questions you can prepare like a spot market features. Okay, here it is there spot market features of spot market. Spot market means on the spot the trading takes place or immediately effective. Physical market is also known as the cash market or spot market. The prices are settled in cash on the spot and current market prices itself. Participation is restricted to people involved in the commodity only, like only those people involved in related with the commodities, only those people involved in the spot market. Most popular physical commodities contracts can be broken into metals. Yeah, types of commodity contracts are given here. Next, commodities physically traded and no market in central meeting place. Okay, next spot trading is delivery basis. Ante here generally in stock market, and that is security stock exchanges, the shares are traded. There's no physical delivery required. through demat account, you will transfer the shares and funds will be transferred from buyer to seller, and shares and funds are transferred between the buyer to seller. Only when transfer of funds and securities takes place in the books. Okay, physical will not be there, but in spot market, physical transfer takes place. Okay, in spot market, physical transfer takes place. That where only commodities, say for example, whatever the commodities we discuss now, these all the people who are dealing with these commodities and the users of these commodities involved in these contracts. So these are spot market contracts. Why spot market? We'd say because immediately settlements takes place. But the future dates, agreements and contracts takes for the future date, but on the date of maturity of the contract, settlements takes place immediately. That means the commodities will be exchanged and the cash payment will be made to the seller immediately. Okay, say for example, I'm a baker. I want wheat. Okay, wheat flour. So I entered into a contract with the farmer who is producing wheat. So I expected, as a trader, I expected in next 6 months the wheat prices are going to increase. So what do? I enter into a contract with this farmer based on the present market price of the wheat. I enter into the contract with the farmer to supply that wheat after 6 months to me at this present agreed price. Okay, so after 6 months, when the production of wheat is completed, that supplier, that farmer will supply me at the agreed price. So on the date of expiry of the contract, I'll get the wheat, whatever the quantity I agreed to buy, and I pay the price, whatever agreed upon in the contract. So that is, contracts are entered for the future date, but on the date of expiry of the contract, settlement takes place immediately by physical transfer of commodities and cash. Okay, it's not like that is what in a different terms, what are the commodities deal in the market and who are the people can involve in the market, how the settlements takes place, all that has been given under the features of spot market. The next coming to with this, I'll wind up. You don't need to go through this all. Means just last, after you completed, if you feel that I have done with all the 4 blocks, then you come to the 5th block. In 5th block, you what you call our stock exchanges, you concentrate first. Then still you have the time is concentrate on commodity market. That's all with our business organization subject. I wish you all the best. And important questions as you all are asking, and just see children, you are having objective type also, right? In objective type questions, don't everything from your textbook only. 5 blocks, every unit, end of the unit, whatever objective questions, fill in the blanks, match the following, or what you call the MCQs are given. Prepare, go through those. From that only examiners will give you the objective questions. There itself you score 20 marks. Done. Now the remaining 20 marks. In short answers, if you learn long answers, some of the topics you will get in the short answers also. So first 2 units, actually from every unit you will be getting 2 questions, right? From every unit you will be getting 2 questions. So those 2 questions, any one, if you attempt, you will get a marks. 1 second. Have confidence on you. I'm telling you, 20 marks easily on objectives you can get. Only the thing, if you have give 2, 3 readings, 4 readings, whenever you are free, whenever, don't wait till the examination time. Whenever you get a time, whenever you are free or whenever you are feeling bored, Open the textbook, just give a reading of objectives that are given at the end of the every unit, twice, thrice, just as if you go through your WhatsApp or your Instagram repeatedly the same videos or same memes. Same way, you just any subject I'm talking about, not only business organization. Surely you need not to depend on anyone. By just giving casual reading of objectives given at the end of the every unit, at least twice or thrice, help you in scoring 20 marks. Understood? Now remaining 20 marks. If not 20 marks, okay, there you lost 5 marks, you think. Remaining 25 marks. If you read any 3 units thoroughly, without chance, you will score good marks. Okay? And I'm telling you, business organization, first topic is I don't have the soft copy. I'll just go in the nature and scope of business, social responsibilities, and promotion of business. Nature and scope of business. Unit 1, you read fully. Don't leave anything from the unit 1. Okay. After unit 1, all questions from unit 1, read all questions. Unit 2, give me a chance. Unit 2, corporate social responsibility of business. First question in long answers. And fourth question. First and fourth question in long answers, page 44. Unit 3. Unit 3. Page 56. Promotion and stages in promotion. 1 and 2 questions. Long answers, 1 and 2 questions. Unit 3, long answers, 1 and 2 questions. And Unit 4, sole trader. Unit 4 is about sole trader. No, block 2. Yeah. In block 2, sole trader, partnership, cooperatives. Features, advantages, disadvantages. A tabular form is there. I think you will get that a common features. Okay, sole trader. Block 2 I'm talking about. Block 2 you have sole proprietorship, Hindu undivided family, partnership and cooperatives. So in block 2 you learn about the features, advantages, disadvantages of all these and the difference between the sole trader and partnership. Okay. Hindu undivided family generally can expect in short answers, 8-mark question. Okay, but sole trader and partnership, compulsorily you'll get either the features or advantages and disadvantages of sole trader and partnership. So be thorough with that. In the next third block, business organization, that is joint stock company. In joint stock company, again, features, advantages and disadvantages of joint stock companies. Okay, features, advantages and disadvantages of joint stock companies, difference between the partnership and joint stock companies, important documents, memorandum and articles of association. I'm giving you important questions, please. Okay, so in block 4, what you can learn, joint stock company features, advantages, disadvantages, under the incorporation of a company, important documents, that is memorandum of association and clauses of memorandum. One question only, that is the detail about the memorandum of association. Next one is articles of association. Articles of association and contents of articles of association. Prospectus and contents of prospectus. Okay, these are the important questions which you are supposed to learn under which you are supposed to learn under this block 4, block 3, block 3. Next one is sources of finance. Sources of finance. Block 4. Under the block 4, let me see. Block 4 again. I need to check what are the. Yeah, factors determining need for finance. Factors determining working capital requirements. Factors determining working capital requirements. Types of shares, equity, types of equity share, types of preferential shares and types of debentures. Types of preferential shares and types of debentures. And retained earnings, public deposits, these under short answers you can expect. And next, and from the modern sources of finance, whatever modern sources of finance are there, again while telling, I told you already, leasing, hire purchase, venture capital, angel investors, bootstrapping, private equity. Okay, these you can learn for the short answers. That's all. In fifth unit, fifth block, stock exchange, I already told you yesterday and today while teaching the stock exchange. So these questions you be thorough with your preparation, and I'm telling you, it not necessarily you prepare all the 5. First, you choose the 2 units which you comfortable and which are easy for you. Thoroughly, without any choice, you prepare, and then out of the remaining 3 blocks, select the block which you feel easy and have a few topics. Okay, that way you can score minimum pass marks. You need not to depend on anything. If you remember the side headings and write that relevantly, read. You all are working, right? You all are working. So if you concentrate on what you are reading, if you try to understand generally what the topic is about, you will able to write. Remember the terms of the subject and use those terms in your writing. Surely you will pass. So anyway, thank you all of you. Once again, let me take a pic of it. Yeah. Just please stay on. All the best to you all. Right. Anything else? Unmute yourself.
Yes, ma'am.
Ma'am, please
Yes, ma'am.
once again.
Yeah, someone asked about lame duck stack. Someone asked about lame duck. Lame duck is a speculator who trades in different markets with an expectation, but when his expectations goes wrong and makes a losses, we call as a lame duck. And stag is the one who makes profits by trading in 2 different markets at 2 different prices of securities.
Ma'am, offline classes.
All those details only university can tell you, ma'am.
साड़ी नजदीक से बताता है
मैम
Yeah.
hello ma'am.
Yes.
Ma'am, I've missed some questions, ma'am. Can you repeat it once again?
No, ma, I can't. I did not note it. I just refer the book and said, please collect from your. Okay, right. Thank you, children. All the best. Okay, keep
Thank you, ma'am.
attending your classes regularly.
In long answers, how much lengthy we have to
It
write?
is not that how much length you write. It is important that how much content you are writing correctly. Okay, and using the subject terms properly. Don't write the stories. Right, children? See you all.
ఆఫ్లైన్
The
క్లాసెస్
best.
ఎప్పుడు మేడం?
Okay, ma'am.
మేడం ఆఫ్లైన్ క్లాసెస్ ఎప్పుడు?
No idea. Now no offline classes. ఈ subject అయిపోయింది. Online classes తో subject అయిపోయింది. So you will have exams only. No offline classes. Next semester కి మళ్ళీ next semester decision is different. So ఈ semester కి online classes subject is completed.
అన్ని
You
ఆఫ్లైన్
are
అయినాయి కదా మేడం?
prepared for your exams. Thank you, children. Bye bye. See you.
Thank you, ma'am.
హలో